but now we have a veritable existential threat to the oil sector. It really puts into question the wisdom, the frivolousness of having endorsed net zero to the detriment of our ability to sell the most important export we have as a country, bar none, oil and gas.
Welcome back to Northern Perspective, everybody. So the hot topic for this week is the extraction and capture of Nicolas Maduro, who is the illegitimate president of Venezuela, president, if you want to call him that. And there are far-reaching implications all across the globe regarding this. All countries are weighing in on this. And one of the concerns that has been raised for Canada is, what does this mean for our oil and gas sector if the US can get their oil supply from elsewhere other than Canada? To discuss that and to look at possible implications and what our future might hold, we are bringing on the gas man himself. Ladies and gentlemen, please welcome Dan McTeague back to the show. Dan, welcome back.
Good to be here, Ryan and Tanya. Thanks again, and looking forward to a great discussion here.
Okay, so before we get into oil and gas, let's go back a few days. What was your initial reaction when you heard about the fact that the U.S. staged this late night special ops raid to essentially remove the dictator of Venezuela?
Normally, when I get up in the morning, have my coffee with Daniela, my wife, I talk about geopolitical events on the foreign affairs side, where I spend a bit of time as a parliamentarian. I get the eyes rolling, but I didn't this time. And I said the implications for Canada would be substantial. Everyone was looking at whether it was legal or otherwise, and a bit of a shock of a story. I immediately had to think about what Venezuela has always represented for me in my time, certainly beyond the automotive, but in the energy sector, and that's the real supplier of heavy oil into the United States. And so my first reaction was my heart sank very quickly. And I made a couple of tweets, not many, on Sunday, reflecting how I felt. Of course, there was the usual crowd of self-promoting neo-experts came out saying, oh, this is not going to happen. It's not a big deal. The next day, by Monday, my fears had begun to be realized when the market started to devaluate the stocks of some Canadian assets. And of course, some of the other predictions about China being told to get lost. There's only 1 million barrels left that Venezuela is producing. Most of that was going to China. Now that's ended. It's going to the United States. And the other one was what would happen in a scenario where the new government, whoever that should be, agrees to the removal of sanctions on tankers and sanctions on the production of diluent. I'll get into that a little further. But it really means that Venezuela could easily ramp up to 1.5 million barrels a day, and all of that likely to be earmarked for mostly the United States, U.S. Gulf Coast, where over the past 10 years, Canadians have basically taken up the vacuum left by Venezuela and Mexico to a lesser extent, who used to provide all that oil into an area. So people understand, Ryan and Tanya, the United States Gulf Coast produces half, that's literally half of all the oil and gas and product needs for the United States. So it's a very critical area. We sell about 900,000 barrels there, a little bit more every single day by pipeline, by rail. We've been able to reverse those pipelines as a result of the vacuum created by Maduro and before him Chavez nationalizing a number of U.S. companies and being sanctioned. So an advantage for Canada, the need to build another pipeline, I think is becoming obvious to all, but now we have a veritable existential threat to the oil sector. Maybe to a lesser extent the gas, but oil sector, where we could lose as much as 1 million, maybe 1.5 million barrels a day, displaced by Venezuela's ability to quickly move that oil that they currently have, remove some of the contracts that they have, and get that to the U.S. Gulf Coast. I think it doesn't just scream, we need to get another pipeline. It really puts into question the wisdom, the frivolousness of having endorsed net zero to the detriment of our ability to sell the most important export we have as a country, bar none, oil and gas.
So a couple of things that I would follow that up with in terms of questions is, is there is there a signed, committed agreement between the United States and Canada, where the United States is committing to buying X amount of barrels of oil per day from Canada, and if not, um, that's interesting. And two, Mark Carney would have everybody believe that, oh, this is not going to be a problem and it's not going to impact our oil and gas sector. Um, from a guy who doesn't really seem to know a lot about the oil and gas sector and endorses pipelines being built elsewhere but not in Canada. So, what's your take on those two items?
Well, I think it's fanciful and reckless to assume that this has no impact when, in fact, this has a major degree of impact. But don't take my words for it. The markets today, yesterday, and the day before have really taken a second look at this and began to remove their positions with Canadian stocks and investments in Canadian oil. That word investment is important as well, because it also means that the money is going somewhere else. The promise by the Trump administration to guarantee some kind of an agreement with Venezuela, whether it's the existing vice president or Rodriguez, or somehow an agreement with the rightly elected president and the representative of Venezuela, could very well mean a formalization that guarantees security of those investments into rehabilitating some of the dilapidated production in Venezuela. And what it really means is that as the one that really I said would likely happen turned out to be quite true yesterday, China basically walked away from the existing purchase of nearly all of Venezuela's oil as it stands. So they're currently producing 1 million barrels. China picks up 800, 900,000 barrels of that a day. They said as of today that that deal is no longer in place. It's likely that that could wind up with the United States, especially given the announcement by President Trump that they're going to buy 50 million barrels of oil. And it's not just any oil. Canadian and Mexican oil have the advantage. And I say the advantage because I know the greenies don't like this. It's heavy oil. And you can't make diesel without heavy oil. Sure, you can use U.S. light tight shale oil and light sweet, all sorts of other wonderful products, and you make great gasoline with it, but it doesn't have the properties, the chemical properties to be able to make heavier slates of feedstock oil you need for things like diesel and asphalt. But no diesel, no military. No diesel, no transport sector. No diesel, including aviation. No diesel, you basically have no mining. You have no forestry. You have no agriculture. So what this means is that the United States desperately needs heavy oil, whether it's from Canada or from Venezuela. But if Venezuela has an advantage in that you can get it almost for free, save and accept the compensation you're going to have to pay to Exxon, Chevron, and ConocoPhillips, who had their properties seized and stolen by Hugo Chavez, 15, 20 years ago. It's likely that the Americans will see a resumption of imports of Venezuelan oil into their markets, displacing more expensive and recent arrival Canadian oil. Now, all of it, no, but I'm telling you, 1 million barrels a day represents a substantial loss in economic activity of the country, much less the way to draw investors at a time in which we need investors to make a decision one way or another, having chased out Northern Gateway. So, unless a miracle happens and Mark Carney finds new religion and approves the pipeline and the power that he has immediately so that we can get our product to other alternative markets who desperately want it, have come to us asking for it, especially in Asia, but Japan, South Korea, yes, China. China now needs 800,000 barrels of heavy oil. Where are they going to get it? Too bad we don't have a pipeline available. What this really means is not just a lost opportunity. Oh, shucks, this is a problem we're going to have to deal with in 5 to 10 years. We're going to have to deal with it in the next 5 to 10 months, if not sooner.
So what about the question about a commitment? Is the U.S. not committed to buying this oil from us every day, or is this
good question.
How would they get out of that?
It's done via the market, and Canadian oil was able to nimbly turn around pipelines. So we understand Venezuela used to send oil to the U.S. Gulf Coast. From there, processed by the number of refinery row from Louisiana all the way back to Texas, and some of that oil made its way back even further north into Oklahoma in a place called Cushing. Now we might know the name Cushing because it's where West Texas Intermediate. Of course, Cushing is in Oklahoma, not in Texas, but nevertheless, it's where West Texas Intermediate hub used to have. So we used to fill up the oil tanks there, and they would distribute it around the United States. Not all of it, to be sure, but Venezuelan oil used to have a massive impact on the availability of oil to the United States, especially the oil they desperately needed, as I mentioned earlier, for diesel. There is no formal agreement that Canada has with the United States to send that down there. We offered it, they needed it, no one else had it. And by the way, even some of my newfound experts who suddenly come to the fore thinking they know a lot about this seem to forget that it wasn't just because of Venezuela dropping. Mexico used to sell 800,000 barrels a day into the U.S. Gulf Coast, but apart from cartels and problems with those things, salt inside their oil and water in the oil was contaminated oil meant that there wasn't a very good product. And so Canada became the favorite. We were able to turn around pipelines, and how it works. Other than the existing Keystone going from Hardisty, Alberta, all the way down to the U.S. Gulf Coast, Corpus Christi, Houston, etc., we were able to take a number of pipelines that went to Illinois. I'm thinking here of something called the Flanagan, the Platte, the Epcor. There's a bunch of them that we're able to reverse. We just turned the pumps around rather than flowing north into the United States from the U.S. Gulf Coast. Canadian Oil was able to get into that hub and send it south right to the U.S. Gulf Coast. So much so that today, on a day like today in Houston, they're using 900,000 or more barrels of Canadian oil. Some of that, of course, is railed. So you think about that. That's a pretty significant development. Oil from Alberta making its way all the way to the U.S. Gulf Coast and used by Americans. That's about to be removed, displaced because of our inertia, because of our dithering, and because we've sat back and said, we don't really need this stuff. We've decided to lop off the head of the golden goose. Good luck with that on your pensions in the days to come.
So after Maduro was captured and things were kind of new, we had even reported on Sunday that the Venezuelan infrastructure for the oil was very old and decrepit and may not have a huge impact on Canada's ability to produce oil and to make a profit on oil going to the United States. Is that incorrect?
It is incorrect. And the people who came out and said that have never been to Venezuela. I've been there twice. I know what's going on, both when I was a parliamentarian and my travel there with respects to Guyana and to get what's called ACO certification for the airport in Georgetown after Guyana found a massive deposit through Exxon's help of oil off that coast. Nevertheless, in my areas, in Carabobo and not far from Cristobal, I was able to see firsthand what they need is upgrade, is changes and maybe some improvement to the upgraders. Not only did they lack the supply, they also lacked the technology. When Chavez came in, he kicked out all the technology guys, the ones who knew how to operate these things, and had a bunch of military folks pretend they could do it. So their total export dropped from 3.2 million barrels a day in 2007 to about 1 million a barrel today. Doesn't mean it shut down, but I can tell you the greatest obstacle that Venezuela faced wasn't so much the infrastructure, which we can all agree has fallen to the wayside a bit. It has been the sanctions imposed on its vessels, and of course the lack of access to diluent. Why is that important? Some people in Canada refer to it as dilbit. Basically, you sell or give to Canada condensate so they can mix it with heavy oil so you can move the stuff through the pipeline a little bit better. Venezuela had limited access to that as a result of U.S. sanctions. That lifting of that sanction and the sanctions on vessel importation or exportation will move massively, apart from the fact that now that million barrels that was earmarked for China is now potentially in the open market heading to the United States. And 24 hours ago, President Trump signed in and said, we will buy and commit $50 million in purchase, not just in terms of reclamations for the money that Venezuela stole from those three companies I mentioned earlier. There's a few others. There are Indian companies as well that have also been affected by this, as a handful of other players. But it means potentially now we have 1 million barrels that we didn't have 24, 48, 72 hours ago, as I predicted on Sunday and Monday would happen.
So this should evidently send a chill down the backs of, I think, Canadians all across the country as to, what happens now. Because even if Mark Carney does, as you suggest, even if he stopped what he was doing and approved a pipeline today. And when we started getting shovels into the ground, pipelines don't spring up overnight, do they?
No, they don't. No, and it would take a long time to build them. The Americans can build one in a year. They don't have to deal with nonsense and people protesting. I recall one that was done in the United States in Dakota where there were protesters. I mean, Trump came in and basically threw them in a temporary jail and got the project done. When the project was done, they were allowed to get back out. Nevertheless, the incentive here is that you're going to get much cheaper oil, which will depress global prices. And I'm not even talking Iran. Wait till that situation begins to settle itself, and that we have a more a more stable, more realistic, and less sinister government running that country. They'll want to sell a lot more oil into the world. We're going to be looking at $40 or even $30 oil. Ryan, for oil drillers and for oil players in Canada, we fall below $40 a barrel. You're going to see a lot of shut-ins. And right now it's about $44 for WCS, Western Canadian Select.
So can you clarify what you mean by shut-in?
Well, what you're going to see is, right now Canadian oil trades at $44. WTI trades at about 57. Canadian oil is always heavily discounted. It used to be $20-$30. Now it's about 14-15 since we opened up the Trans Mountain Pipeline. But what it really means is that discount brings oil today. If you look at, look all the slates of oil, the types of oil, the Canadian oil, one of the cheapest oils in the world is in fact Canadian heavy oil. So it's called Western Canadian Select. It's selling for, well, I checked last night, it was $44 a barrel. If it falls below $40 a barrel, the cost of production is so high and the returns would be minimal that at $40 or under, you're going to lose money. With more oil coming on the market, not just with Venezuela, but also potentially with Iran, that is likely to depress global oil prices around the world. I mean, the good news for consumers short term, cheaper gas prices. We see gas prices this year 30 cents a liter less than last year. Two factors: the carbon tax, the silly carbon tax, the first one, punted. That saves 20 cents a liter. The other one is oil this time last year was trading WTI, West Texas Intermediate, for about $70 a barrel. As I mentioned earlier, to 57, 58, 59. That's the main reason why we see prices lower. But the consequence of lower oil prices and less sales of oil also means a bit of a Pyrrhic victory for Canadians. Why? Because it'll hammer the value of the Canadian dollar. Our number one export, whether you're trendy or not, whether you like it or not, is oil and gas. It's not electric vehicles or batteries or hydrogen.
It's not?
It's not. Apparently, surprise, surprise, because, there's no business case apparently for oil and gas, as we heard from one previous Liberal leader that the El Bozos out there thought was great to go out and support. But the effect of all of this is going to weaken the Canadian dollar, which causes every commodity that we consume in Canada, whether it is made here or not, to go up in value. Ryan, Tanya, I've been doing this for many, many years, gas prices. But every time I do a gas price, I have to know what the Canadian dollar is selling for. I have to know on any given day, 137.56, 137.81. We value all of our commodities in U.S. prices. So if you lose oil, you lose 10%, 15%. You have shut-ins. The sector shuts down. So does the value of the dollar. And therefore, your purchase power goes to the roof. How long do you think it'd be before bond rating agencies really take serious Canada's national debt, the seriousness of its debt? Our economic activity has plummeted. I saw Martin Pelletier put out something this morning regarding manufacturing, and investment in manufacturing equipment is at an all-time low period. The United States going through the roof, Canada dropping to almost zero. It means no one's buying anything in this country. Nothing's happening in Canada, and there's a real risk now that our number one export is about to be torpedoed without the ability for us to find alternative markets, because we would have had another pipeline to send that alternative, that displaced oil, back to places around the world that truly wants it, but we can't get it.
Well, and this is on the heels of Mark Carney just announcing that we're going to be quadrupling our defense budget over the next little while to support Ukraine and everything else, which is going to catapult our national debt even higher than it already is. To your point, that will signal, red flags and alarms to the bondholders and the debt holders and the credit rating agencies, which could cause them to reduce our credit rating even more, which causes our debt servicing to go through the roof. And, it's not just going to be, all of the GST and sales tax that Canadians are paying that is going directly to servicing the debt. It's going to be, all of the other extra taxes and fees that we're going to be paying to do that as well. So the interesting thing about this is, so let's just gameplay this. So if Mark Carney accepts the fact that, okay, we do need a pipeline, and he does manage to approve it, politically, I see that as a big problem for him, because he has tried to straddle this line of the liberal base of, I'm an economic genius, but I'm for the environment. And he already got a quarter of his caucus ticked off at him about his MOU with with Alberta about the BC pipeline, which he never thought was going to happen in the first place. So what happens if he actually does go with a pipeline now? I anticipate a lot of that environmental and progressive support siphoning off of the Liberals, going directly to the NDP, and the Liberals' support dropping like a stone. Is that your read on this?
Well, I think that's going to happen for sure. Some of those people who are so-called liberals, hand-chosen by the liberals, not earning their own right, having very little in the way of organization, came from the NDP or from that particular tribe of ideology. So what they're doing in the Liberal Party is any wonder to me. But I'm a liberal that's old enough to remember, Jack Pickersgill and Lester B. Pearson. I worked under the first Trudeau, and there was no such thing as suggesting that we should move and embrace socialism, social opportunity, creating social cohesion, perhaps, but not creating outright socialism. That's what distinguished my Liberal Party of my time from the party that currently exists right now. But Mark Carney's got an even bigger problem. His MOU adds significant prices to the barrel of oil. So if $44 a barrel dropping to $40 a barrel, Venezuela can sell it for 35 or 30. We have to now factor in the cost of carbon sequestration, or CCUS.
We're priced out of the market.
Storage. We have to factor in the increase in the industrial carbon tax from $95 to $130 or $135. That's an extra $10 a barrel. So now you're looking at $17, $18 plus 40, 44. You're at $58. I can get WTI for a lot less somewhere else around the world. We have priced ourselves out of the world market, and having gone on, this is the real fatal problem. Having signed up to this net zero nonsense without wanting to nix it has put us in a very vulnerable position in which we are about to lose a significant portion of our existing market without being able to access other markets, because the price of our product has been overinflated, and no one in the world is putting a price on carbon on their oil. Who the hell is doing this? Nobody. So why are we doing this in Canada? I mean, unless we want to, I don't know, maybe I got a toolbox outside. Someone wants to get the drill bit. I can get another drill to drill into their craniums. The reality is that we are only hurting ourselves by trying to be trendy and woke and cool. But you know what, Ryan, Tanya, it's not 2015 anymore. It's 2026. And we're now having to pay the bills of this massive exercise in frivolity that we have been engaged in by going down this road of net zero. It's nice that 10 years ago, people sat back, went to a Paris climate agreement, decided to swill back some Perrier and eat canapes and celebrate and high five, while the rest of us have had 10 years of squalor as a result of a declining economy and an adherence to a policy that has been extraordinarily damaging, not just to Canada's energy sector, but to our manufacturing sector and every other sector. And above all, consumers who now, when they go to the grocery checkout, can't afford to pay for the things they once took for granted.
Well, it sounds like things are pretty dire for Canada right now, but is there any way out of this? What can we do to fix this?
Yeah, we have to get a pipeline approved immediately. And it's dire. We've talked about this. You, at Northern Perspective, have been extraordinarily adept at trying to signal to people. We're warning you. We're telling this is going to happen. I've been on several of your shows. I've told people this is what's going to happen. As I said on Sunday, what's going to happen with response to Venezuela. Oh, we don't believe him because we don't like his view on climate change. Well, tough luck. I'm worried about this generation, the next generation, the generation after that, having an economy that functions for them, maintain their prosperity, much less keep the country together. What do you think Quebec's going to do in this context? No more money from Alberta, so what do we do on equalization? To make it a lot easier, and I think Jean-Yves Blanchette has made it very clear, where the Parti Québécois is going in Quebec I did an interview with KUB this morning in Quebec. I know exactly what's happening. The country doesn't have the ability to produce funds. It's not likely it's going to be viable, let alone what it's going to do for Albertans who are saying, well, this deal has left us in a very vulnerable position by adhering to whatever Ottawa wants. We're now in a situation where we can't make ends meet. There are some people who tragically are thinking they should go it alone. Can I blame them? No. But I think we need to act decisively. And that decision comes in two quick ways by Mark Carney saying, I have the constitutional authority to make a decision. I make that decision today. Northern Gateway to reality. Second of all, I'm going to China next week. They need 800,000 barrels. I'll be glad to sell that to them, get them to come in and do some investments with conditions, of course. But let's get this pipeline built. We have an investor because right now, as a result of what Trump did in Venezuela, investors who might have been thinking about Canada but scared away by the nut jobs on the left, like the David Eby's and the John Horgans and other climate fanatics, have really done a good job in making sure no one wants to invest in this country. Anybody who had the iota or thinking of coming to invest in Canada to build a pipeline is now going to put that money in, ironically, a place that looks a lot less stable. That's Venezuela, and that's happening right as we speak.
Well, we will continue to follow this, and I think this also proves once again, Pierre Poilievre is not a psychic, but he's very good at predicting what may and may not happen in the future when it comes to the Canadian economy and the market. And although he didn't predict that Trump would go and capture Maduro and take on Venezuela, he's also been sounding the alarm of us not having a pipeline in Canada. And now those chickens have come home to roost. And as you say, it's time to put up or shut up. And we need real, unapologetic political leadership in this country that's focusing on the good of all of Canadians, not just serving special interest groups.
Oh, I agree. Listen, Pierre Poilievre got it absolutely right, and he got it done within lightning speed. He responded very quickly. He understands the problem. I hope the Conservative folks that go to the convention in Calgary at the end of this month recognize how important that is and how different it is from the Mark Carneys of this world, and give that man the 100% he deserves for his perspicacity on these very critical issues for which the future of the country is very much at stake.